All right, peeps. It's Danny here with another investing video. Um, things did get a little wild, and I did miss a lot. I made a video December, and then there was just no noise, and then I just like was too tired to redo it. So this is obviously it's been a while. It's not a whole lot of you know continuity with the prior video, but I mean, we're continuing the same idea. It's just got a lot more wild. So we basically added a lot more to the the portfolio. The positions have gotten a lot bigger. Mainly, we added a lot of Zim on some drops. I fundamentally like it. There's quite a big short in there. So the strike never happened, which I don't think is actually terrible for Zim, because Zim is in a very good cost basis position. So when things do kind of um, resolve in the Red Sea, which is not going to be for quite a while, because obviously the crisis still has to be resolved. I mean, there's talks that maybe it is coming to an end, but first has to resolve, and then there's a lot of uncertainty about how quickly, even within that resolves, how quickly everything resolves in the Red Sea, and then everyone has to be comfortable with it. So it's kind of summer at earliest, and then with the carry of freight rates, how it takes so long to realize, we're talking three more good quarters. And we're sort of expecting ish, I mean, it's just guess, but maybe $4 dividend. Obviously you get the 25% withholding, but even a $4 with 25% withholding is three. $3, dividend. My guess is obviously they're gonna have, 3/4 of dividend in a row plus probably a step up, you know. So I mean that's quite a lot, coming out from Zim, and obviously, but we had bought a lot, but obviously it went way down. But I'm not really worried. Obviously, you see a lot of red on Zim, but I mean, we're going to take a $4 dividend, a $3, and off of 1,300 shares, that's, something like 4,000, $4,000 dividend. I'm expecting even, minus the withholding. NLY, obviously, we're seeing a pretty big negative as well. But again, I'm not really worried. I think that what we're seeing is that people got excited that the Fed's not going to cut as fast as possible, and maybe even that they might um, re-raise. I don't think they're going to re-raise. I think that was really overdone. I think there's just a lot more anxiety about the Trump administration than is really warranted. I mean, obviously, not to be political or anything, but the reality is, I don't think presidents are really going to carry nearly as much weight as market thinks. I mean, market all presidencies are overdone, I think, from a market reaction standpoint. So we've seen a huge drop based on that. And then, the data is showing that the Fed probably, is okay not cutting. Now, obviously, probably realistically, maybe I got in there a little bit early, but on the other hand, I've been selling options off of this for a long time, plus getting the dividends. So, yeah, maybe my entry is not as, lovely as possible, but we're still doing quite strong, and taking those 65% dividends, and I guess there's fear of a dividend cut. The thing is that they're making 66 cents earnings, so even if their earnings slip a little bit, what are we talking? Because they have to pay out 90%. So I mean, maybe they could, I mean, sometimes there can be lots of costs they can put in to lower it, to kind of, but then that's gonna, if they're lowering it and they're, kind of using that to offset, the dividend, that means they're increasing their NAV, net asset value. So kind of preparing for another, so to me, it's like, okay, we're talking 13, 14% here yield. Obviously it's been more 14% recently, but mostly I bought this at 13. So, you know, what if they cut, what does it go to off of my basis, like 10%? I'm still pretty happy with that. I mean, it's maybe not. Well, the thing is about this is the dividend has gone up and down historically over time. That's something I've kind of studied, and so it's like sometimes it's an 80-cent dividend, sometimes it's a 20-cent dividend. I mean, you just kind of got to roll with the punch there. So it's going to be high sometimes, and then sometimes it's going to be good, but not as high. So I'm okay with that, and I like where we're sitting on this. I mean, not not most ideal. But obviously the biggest thing is that I kind of got in here, Zim, and then there's this huge shorting action. Obviously, we're gonna take a $4 dividend plus full year is gonna be probably good in 2025 likely. I mean maybe it tapers badly, depending on when things reopen. But even still, it's just how long everything takes. I would not be surprised if we see at least $4 dividends in the next year. So, you think about that, dropping, it's a good scenario to be in. But I mean, obviously, with all the yield curve things, and not knowing how much the short action is going to drive down the Zim stocks. I did get did we're bringing quite a lot of capital, so um, I think we have like $64,000 worth of stocks in here now, and only 7,500 leverage, and really that leverage is going to get pulled down very fast because we got the 1,300 in dividend coming in, so that kind of pushed it down to about 6,000. Then after the Zim, I'm expecting about 3,000. So like there's about 3,000 left to bring it to zero. I want to bring it to zero. Just haven't been at zero for a very long time. Mostly for my sanity. I want to get to zero. But also I kind of feel I don't know really know how all this SMA works, but it's very confusing. Apparently it's position based. I don't know. I just want to get to zero. I think it'll reset my numbers. I do feel like my numbers are kind of like not as good as they should be. Although maybe they are because I think it complicates things. I got options in there, so I don't know. But anyway, I just want to get to zero for my sanity, and then maybe throw in a tiny bit. But I don't want to. I just don't want to be doing as much leverage as I was, and I feel like this is just a finalized portfolio. I mean, not finalized. Um, it's not. This is not obviously. Well, this is as much capital as I want to put into this. I don't not want to put any more capital into this portfolio. I mean, if I do something else, I'd probably start another account. But this one, I mean, I do want to keep building this in that because this is not sort of final build of this portfolio. But it's the rest of the build is from the dividends, is what I should say. So obviously, I mean, because of the portfolio making, obviously I've got good content. I've got the NYL, the Zim, the PSCC is obviously, that, but we made quite a lot on that in some tradings. Obviously now it's kind of a little bit of a pain, but I do think that it's going to be stable for a very long time. So I'm not hating on it, but I definitely wouldn't add more, and that's a little bit of an eyesore. But obviously the biggest thing is that we're talking Zim is a cyclical. Now obviously we have it here. The cycle is still strong. We've got hopefully $8 plus in dividends. Before the cycle ends, we're selling options off of it. So we're gonna really get get everything we can out of it this cycle, and then just hold it till the next cycle, and then probably just just do what we can. I mean, obviously, I think as when we leave the cycle, there are probably just gonna be all these abandoned options, and I'm just gonna have to just pick pick little ones to make a little bit off of it. Plus, probably gonna see some wild short interest on this. So I do have share lending, so my shares are gonna get lended, get something off of there. So I'm thinking that even as this, it goes, through the thing, what happens is that people, like, their options are start to expiring, they paid a lot of money for it, they want to get something out of it. That's kind of an opportunity for me to, buy it, yeah, and just kind of scrape some pennies off of it. So we're just going to keep holding that through everything. Of course, it's going to be wildly painful. But then, it comes things. There's going to be, the next super cycle. But we'll find ways to make some money off of this even at all times. But we'll have to obviously they'll protect it, be smart. But that's the good thing, And the other thing too is that people long-term outlook, we'll see. But yeah, but also just, because, I'm not sure when the super cycle ends, but, we don't want our leverage to be. Also, obviously, NLY is a little bit of a cyclical too, in that, based on margin of rates, because basically what they're doing is the banks make the loans. NYL, buys the loans from the banks or whatever, and they're the ones who actually carry it to the end. So banks usually don't like to carry the loans to the end, so they'll sell it to a service provider who then, they're basically, borrowing at a certain rate, and um, the mortgage is at a different rate, and they're allowed a certain amount of leverage. But depending, the situation, they may not reduce their leverage. So this could have a higher or lower difference. So we got quite a lot of cyclicals in here. So I want to turn this. I want to take these cyclicals and turn this into, obviously these we're going to keep these cyclicals. These are all base stocks. I don't want to get rid of Zim, remove it. I don't want to get rid of NLY, remove it, but I want to build this out to be a more every month portfolio. So the next big target obviously is Income Realty. I like that. It's kind of an every, you know, um, it pays every month, and it's very strong. So I would like to get 100 shares, and then we can sell an option off the top of it. Obviously that's I don't know what else we're gonna put in here. Aries, Aries Capital, I think makes a ton of sense. Hmm, not sure what else, but there are a lot of good dividend stocks. So maybe even just start, doing something like Verizon. I don't know. But we'll figure it out. But I mean, I don't want to get too far ahead of myself because to me, it's like, okay, where we are now. And this could be the last video for a while because I don't even know. I mean, frankly, at this point, it's just like I could go to sleep and not worry about it because the leverage is like, what is it? The leverage is like 10% of my equity, so it's just nothing really, frankly. Plus, it's not even 10% because with the 1,300 dividend and then the 3,000 dividend, it's going to go to zero now. Now, how soon? I don't know. I mean, the biggest thing is just the options on this. Obviously, I did sell quite a lot of Zim. With the price falling, it did people weren't really very generous on the 2-year outlook, especially I think with the super cycle ending. I mean, it could spike, so I mean, obviously, there could be a lot of value in that, but I think people are a little more skeptical, on a sort of a 2-year option. Uh, and then short, they're very skeptical, but mid-range, they're a lot more optimistic. So we went kind of mid-range on Zim. Sold a bunch of 140 at 140. I guess our average was 142. I don't know. But anyway, the point is, I don't know why this got my view. I think you have a different view. But hopefully, because mine got a little weird. I'm looking at a different segment than you are, but I mean, it should be the same thing. I just have more interactive. Um, but oh yeah, that I saw. Yeah, my basis was, or I was selling it. Yeah, like yeah, 142 um calls. So there's 10. So that means that's 1.42 per share. So um, basically, I got $1,415 selling those options. It's a 20 $20 strike, meaning that if it's not above 20, it expires worthless. So obviously, my what that would mean is that if it did sell, they'd be selling the shares at a like 72-cent loss. But I mean, it's obviously that's way more the value from that. Plus, it's holding the interest down. Plus, obviously, I'm also going to run through that big $3 dividend at that point. Unless they call it early, but I think the odds of them calling it early are like always super low. In any case, even that, if they call it, it's just not gonna worry about it. You know, so I was trying to even like maybe like remove, but I mean, some of the other calls I was thinking about trying to remove. Oh, we did get an April call in, just because we were having some trouble after a while selling the June call. So I got an April call in. Um, it it was actually, I mean, it's not quite as much, but actually the yield was a lot better on it. The 120 versus 140. I mean, it's 20 $20 difference for a number of months. So I mean, obviously, hopefully, you get to April, it's still good. Actually, that might actually even be a better call than this one. The yield as a percent, but it just kind of depends where the stock is sitting in the outlook. The one I couldn't really remove, but I also didn't. It was hard to entirely, you know, it's hard to entirely, get myself to remove it. Was uh, um, it's why does it not give me the prices? It's getting all weird on me. Try refreshing that. From memory, it's oh great. It's still being terrible. It's just like, why is it? I guess maybe the thing's a little weirdly. I need to drag it or something. I don't know. But that call is like I've got two of a call in January of 2027. That one is actually saying 0 to me. But it's actually I think it's a 24. From memory, it's something really high, and that was also the thing is like it just was just too much for me. It's just too nice of a call to scrap. So even though I could maybe get a little more yield than those um, you know to me like those I mean the 20 calls. I mean the 2024 call. That's just a really nice call. So that was just kind of like I just couldn't bear myself to even try to sell it. It was just too good. I mean, because that 24, I mean, I guess it's just sold it at the right time. Um, because I got good money out of it. And it's um, and then it's still good money. But I mean, even the 24 is way above my average. So just too hard to remove for me, and just not worth it. So I'm gonna just hold that one in Not unless it just really goes really far down, then maybe I'll. But at this time, it's just too good. So obviously, then the big point is I'm coming through maybe April at around 3,000, and then obviously you're taking hopefully still about 1,300s off of NOI per every 3 months. And PSC probably just really just holds the interest down a little bit. But I mean, at this point, it's not hardly any of that anyway. And then, obviously at some point, you know, you know, probably midsummer, hit zero when I get to reoption the ZIM plus the NOI dividend, and then I can start building up on income realty. Really income, and then from there I don't know, but I mean at this point it's kind of I don't know even know how many videos I'm going to do because it's going to just be a slow thing, because it's not really at this point it's just sitting on it, I mean because unless we get some interesting movement, but I'm not going to add more. I'm just going to I might just buy back some of the options and re-option in a different way if the movement was interesting, but ultimately we're not really even going to be doing hardly anything on this through the summer. Because and maybe not even until September, depending. I mean, because I want to hit to zero before I start buying anything. Um, so, but anyway, that's where we are. I'm feeling pretty solid about it. Obviously, not everything shook exactly how I would like, but it's solid and rolling. So, and the outlook is good. So we're just fundamentally rolling with it. All right, so that's that, and I'm not going to belabor it much longer. I think we went pretty deep into what I'm thinking, what we're planning, what we're doing, and hope you enjoyed. It's, it is what it is. All right, have a good one, guys.